The other thing, though, that has really been big news this week, I think almost overly so, is the 50-year mortgage proposal that came out from our federal government here this week. And of course, you see on the slide there, I call it, is it potential? Does it have potential, or is it hype? So let me give you a little bit, at least my take on that whole debate, because I've seen arguments about this proposal on both sides. First of all, let me give you, it's a little bit of irony that I'm going to provide you through some historical context. You may remember after the Great Recession, back in those days, we had a legislation called Dodd-Frank. Now, out of Dodd-Frank came the creation of the Consumer Financial Protection Bureau. And with that, there was a brand new landscape in terms of mortgage guidelines, the methodology by which mortgage borrowers would be qualified to borrow funds to purchase a home, and the whole new concept called ATR, ability to repay, came to be, where we had to extensively document a borrower's income, determine that they actually could qualify for the loan amount and payments that were resulting from that loan amount based on calculating their debt ratio and their qualifying income. Now, as part of that new regulatory landscape, there was a new set of loan categories. Of course, conforming loans, which has always been sort of the predominant category to get the best type of financing, best rates. But there was a new category that rose out of all this called non-QM, non-qualified mortgage. And within that bucket, one of the things that occurred is we had to now start providing a borrower with a disclosure called anti-steering, where what it was intended to show is that we were giving a borrower a full picture, a full range of loan options for them with a rate range, lowest rates available to highest rate available based on no cost or with cost. And in terms of that disclosure, one of the things that reflected is what was the best kind of rate you could get for a loan with non-risky or no risky features. Well, guess what one of those risky features is? 40-year amortization. 40-year loans have been around for a while, but yet out of the Consumer Financial Protection Bureau came the non-QM mortgage product, and in that bucket is 40-year loans. 40-year loans are deemed too risky to be sold to Fannie Mae and Freddie Mac. So right now, today, even given this new proposal for a 50-year mortgage, Fannie and Freddie do not buy 40-year mortgages because they're deemed too risky. So why in the world would the federal government now propose a 50-year mortgage? That's the irony of it, because word is that this proposal came from Bill Pulte, the current head of the FHFA, that's the Federal Housing Finance Agency, who oversees Fannie Mae and Freddie Mac. So why would it that the head of the FHFA, who currently considers a 40-year mortgage term to be risky,